Really appreciate everyone attending today. My name is Kay Rawlings. I'm the sales manager for Soho Living. And today we'll be covering off some really important topics, some great topics. The first, the 5% deposit scheme that's coming into play as of the 1st of October, which is tomorrow, how this initiative supports first home buyers, and also some practical tips as well. I'm really excited to be joined here today by Anna Trong, who's an expert in the field of finance from Oakbury Finance. Anna, welcome.
Hi, Kate. Thanks for having me.
To start things off, Anna, do you want to introduce yourself to our viewers?
Yep. So I'm Anna. I'm the director of Oakbury Financial Group. I've been a broker for over 15 years. And at Oakbury, we specialise in land and construction loans.
Fantastic. And Anna, can I ask, as a mortgage broker, what is it that you actually do?
Yeah, so we act on behalf of the customer to apply for their home loan approval. We start off by assessing their financial position and borrowing capacity, which tells us how much they can borrow. We then provide information such as repayments, interest rates, how the home loan actually works. We then gather the customer's information and we submit the application through to the bank for the loan approval.
Perfect. And I know for a lot of first home buyers, traditionally they might go to a bank to obtain their finance or query their finance. Why would it be important for a client, whether it's a first home buyer, to engage with a broker like yourself?
So if you approach a bank directly, the bank can only offer you one lending solution. Whereas if you come to a broker like us, we're accredited over 40 different lenders. So that means that we can compare different banks, different products, different interest rates, and then we can offer you the best solution for yourself.
Perfect. So essentially, a client can go to a bank, get one option, whether they go to yourself, you can provide multiple options, potentially save them money in terms of repayments, but also make it easier for them as well.
That's correct. So sometimes when you go to a bank and you aren't able to get the loan approved, you can come through to us and we can offer you a second solution or another solution. And then we could get that loan approved for you.
Yeah, which has actually happened on a lot of occasions, hasn't it?
Yes, it has.
Perfect. On to some really exciting news for first home buyers. This is, to be honest, I think this is huge for first home buyers. And we're already receiving inquiries from first home buyers on this new scheme. So I think it's called the Australian 5% deposit scheme, if that's correct. So it's aimed at obviously helping first home buyers. Can you explain the scheme and how it helps first home buyers?
Yes, so it's an update to the current scheme, which is the First Home Guarantee Scheme. So what the scheme is itself is first home buyers will only need a 5% deposit to purchase their home. That means that they can get into the property market faster. Lender's mortgage insurance is also waived as well. So normally if you don't have a 20% deposit, the banks will charge you lender's mortgage insurance. Under the scheme, although you only have a 5% deposit, the lender's mortgage insurance will be zero.
Fantastic. And so you mentioned updates. So what are the updates to the scheme? Because there's some pretty big changes to the scheme currently.
That's correct. So there are 3 updates to the scheme. So number 1 is in regards to unlimited spots. So previously there was 35,000 spots per year. That has now been removed, which makes it more available to first home buyers. Number 2 is in regards to income caps. So previously, if you were single, your maximum income could only be 125,000 and 200,000 for couples. That has now been removed. So it does not matter how much income you earn, as long as you're a first home buyer, you will qualify. Thirdly, in regards to property price caps, I'll just share a table on my screen here. So as you can see previously, Melbourne's property price cap was 800,000. That has now increased to 950,000.
Right. So yeah, I think the key that you said that everyone qualifies, and some really good changes happening. Why do you think, it's a pretty big change, but why do you think the government's introducing this for first home buyers?
So the government does want to help all first home buyers get into their home.
Yeah, and obviously avoid renting, get into their property, some really important elements there. Are there any key requirements to the scheme that I guess first home buyers need to be aware of?
Yeah, so there are requirements to be eligible for the scheme. The key requirements are you must be a first home buyer and you must be either an Australian citizen, a permanent resident, or New Zealand citizen on the 444 visa.
Okay, perfect. And you also mentioned a term that I think a lot of first home buyers not always are aware of. It can sound a bit scary, lender's mortgage insurance. I know when I heard that, I thought something was wrong, but lender's mortgage insurance, can you explain what it is for first home buyers? Because it is, I guess, a term that not everyone knows about.
So lender's mortgage insurance, or LMI for short, is a once-off insurance premium that the bank will charge the customer if they don't have a 20% deposit. So, for example, on a $600,000 property purchase at 95% loan, the lender's mortgage insurance could be roughly around $23,000. On the scheme, although you only have a 5% deposit, the lender's mortgage insurance will be zero.
Yeah, so essentially saving lender's mortgage insurance like 20,000, 23, it's pretty significant. I guess a key question that's come up, and particularly we've had a lot of first home buyers inquire about the scheme. And when something new comes up, sometimes there's a little bit of I guess skepticism around it. Is it the right scheme? Is it right for me? So I guess in your opinion, are there any catches or things that first home buyers need to be aware of with the scheme?
So normally if you have a 20% deposit, then your loan would be at 80%. On the scheme, you only have a 5% deposit, so your loan will be 95%. So a higher loan will mean higher repayments, but there's no need to worry because the bank has assessed your home loan application to confirm that you can afford those repayments.
Yeah, so it makes sense. Obviously, if you're contributing less, your loan is going to be higher, so your repayments are going to be higher. But as you said, the banks are going to obviously, through the help of yourself, are going to do the assessment. Another thing that was important as well, we were discussing offline, is that first home buyers, the reality of having 20% deposit for first home buyers, I think we were talking about a $600,000 package, if my maths is correct, so it's $120,000.
That's correct.
I don't know if I've met many first home buyers with a 20% deposit. Out of 100 loans, how many clients would actually have 20% deposit?
One, if that.
One, if that, yeah. Obviously, with the support of mum and dad, sometimes.
The bank of mum and dad, yes.
Bank of mum and dad. And as well, a couple of package scenarios that you've prepared, Anna. So, one of our most affordable packages we have at Soho Living is a $470,000 turnkey package. Really great value for first home buyers looking to enter the market. And then we've got another package that's a little bit higher at $600,000. Do you want to talk to the viewers around these and how the deposit would work for these packages?
Yeah, so in scenario number one, with a package price of $470,000, you would need $23,500 only as your 5% deposit, and you'll get $10,000 back from the first home owners grant. In package number two, for $600,000, you only need $30,000 as a 5% deposit, and again, you'll get $10,000 back from the first home owners grant.
And there's no LMI as well.
That is correct, yes.
No LMI. Perfect. So talking about incentives, because there are a lot of incentives for first home buyers. So we talked about the 5% deposit scheme with no LMI, and now you just mentioned about the first home buyers grant. Is there any other incentives for first home buyers?
So first home buyers are also eligible for the stamp duty waiver. If you purchase an established property up to $600,000, the stamp duty will be zero. If you purchase a land up to $600,000, the stamp duty would also be zero.
Perfect. Any other schemes worth mentioning, Anna, other than these ones?
Yeah, so there's also a super scheme where first home buyers can access their superannuation to use towards their 5% deposit. For any single parent first home buyers, you can also pay a lower deposit of only 2% if you qualify. And for New Zealand citizens, if you've owned a property back in New Zealand and you've now moved to Australia, you also are considered a first home buyer, so you'll be eligible for the scheme. the first home owners grant of 10,000 and also the stamp duty waiver as well.
Perfect. So a lot of schemes available. I don't think everyone would have known about, you know, the 2% scheme and the super schemes. That's great. Fantastic.
Yeah. So that's all the information that we have to share on the scheme update today. If you need any more information, just reach out to us and we'll be more than happy to share that. Kate, I've also got a couple of questions for you as well.
No problem. Go for it.
Can you tell us the pros and cons of building a new home?
Yeah, I think so building a new home, there's a lot of pros. And I think you're referring to building versus established. So I guess as you mentioned, the government incentives right now are huge. And particularly like if I was a first home buyer now, I would want to take advantage of this. You know, you'd be crazy not to take advantage of it. So there's a first home buyer's grant of $10,000. So that's $10,000 in your pocket. Obviously the stamp duty waiver, so that can save you thousands of dollars as well. The 5% deposit scheme, essentially, I guess the way that I look at it is that it gets you into a home sooner. It doesn't mean that clients need to rush into a purchase, but it can get people into their home sooner, and there's no lender's mortgage insurance. So some of these schemes obviously overlap with established, but they obviously all apply to you know, new builds. So from a finance point of view, I think buying or building, these government incentives are huge. The second one is energy savings, which it probably doesn't really come up a lot for first home buyers, but it is important. You know, out-of-pocket expense are unfortunately still going up, as we know. All of our homes at Soho Living are 7-star energy rated. So what that means is that long-term energy bills and payments are going to be less, which is really important. So you're obviously not going to get that with an established home that's been built 5 years ago or 10 years ago, or even, you know, 2 years ago. So that's really important. Built to last as well. I wanted to put that one in because, you know, as an example for myself, I've bought properties that might have been 2 or 3 years old, and I've been hit up with maintenance costs, whether it be hot water services breaking down, plumbing, you know, little bits and pieces. All these costs add up. One of the things at Soho Living that we really pride ourselves on is that we want to deliver, you know, affordable home at a great price tag, but also deliver a quality home. It's really, really crucial for that element, and it's something that I guess not a lot of first home buyers have huge visibility of. But as an example, I've mentioned built to last. We offer a lifetime structural guarantee, you know, which is huge. So it means that if someone's in the property and there's problems, we will fix it, and we're completely confident that we will do that because we only use the best quality materials. The last thing that I mentioned was personalisation, which is probably more the emotional attachment for first home buyers. So if you're buying an established property, the home's built, of course you can renovate the property and change. You know, you might be change the floor plan, knock a wall down, but that's probably going to be quite expensive. When you're building, I guess, off the plan, you can choose your home design, you know, whether you want a 3-bedroom design or a 4-bedroom design, you want a 3-bedroom plus a theatre. You can really personalise it to what you actually require. Also colour schemes, inclusions, specifications, you know, it's really up to the client to choose their home. And then it also comes down to land, choosing the right block of land. So they're probably the main pros for me. A couple of cons that I've mentioned, you know, for me, they're not really massive, big cons, but, you know, build time frame. So if people are urgently needing to move into a home, you know, building a home does take time. One of the things that we really pride ourselves on is building on time for clients. But there is a time frame to build a property. So obviously, I feel like it's worth the wait to personalise your home, but there is a wait time because you obviously have to build. The other one I put in there because I thought it was important, and I feel that this is one of the biggest barriers for first home buyers, is that people get scared. If they buy an established home, it's built, they can see it. I feel a lot of first home buyers get overwhelmed because there are a lot of builders in the market. There's a lot of choice. They can visit a land office, feel rushed. But ultimately, you know, building, I think if they have the expert advice and the right builder, the right person behind them, you know, it's definitely the better choice.
Yeah, thank you, Kate. So for anyone who's wanting to get started today, what would you recommend, Kate?
Look, it's really simple. It's really just getting in touch with us. What we want to do is have a conversation with our clients. And a really, really important element to it is that, you know, just because someone inquires, it doesn't mean they need to make a decision tomorrow. You know, what we're here to do is guide clients along the journey. So whether it takes a day, a week, a month, 6 months or 12 months or even longer, that's completely fine. We're here to guide people along the way. To contact us, probably the best way is to contact us directly at hello@soholiving.com.au. Alternatively, call us on 137646. Otherwise, we've got 4 beautiful display homes open if you'd like to visit one of our display homes. So we have 2 in the southeast, one in Averley, the estate's called Averley in Narnagoon, one in Clyde North at Smiths Lane, Newhaven in Tarneet, and Manor Lakes as well is our 4th display. So yeah, either email us, call us, or visit us at one of our display homes. I've just got a couple of questions from viewers. Let me just see what they are. Hopefully they're related to finance, Anna, so I don't have to answer any more of your questions. So the first one that's come up, which is a finance. So what should I do if I already have a 10% deposit? Do I still qualify? This is a really good question, actually.
Yes, so the answer is yes. If you have a 10% deposit, you still qualify for the scheme. So your option is if you want to use 5% and pay a 5% deposit, or if you want to use all of your 10% and pay a 10% deposit, your options are available there. And you'll still get the LMI waiver regardless if you pay 5% or 10%. It's completely up to you.
And another question, we've got about 10 questions here. One of our viewers has said, can one deposit more than 5%? I think you might have just answered that, but just to answer the question again.
Yes, yes, you can. So the answer is yes, you can deposit more than 5%.
Perfect. Another question that's popped up, do I need to save? And this is a really great question because there might be some clients out there that, you know, this scheme has come into play, they don't want to miss out. And obviously 5%, that's the requirement. But the question is, do I need to save the 5% deposit?
So the 5% can be made up of many different ways. So number 1 is your savings. Number 2 is you can receive the gift from family. And number 3 is if you have any assets that you wanted to sell. So for example, if you wanted to sell your car, if you've got some shares that you've bought and you wanted to sell that, you can sell it and use that money towards the 5% deposit.
Another question, do I need to already have pre-approval?
No, you don't need to have pre-approval. So the scheme does start tomorrow. So when you go to apply for the loan from tomorrow, then you would qualify for the scheme from tomorrow.
Yeah.
So if you wanted to do a pre-approval, you would have to apply from tomorrow.
Yeah.
Everyone's lending situation is different. So it's best to speak to us and we would advise you if a pre-approval is required, or you could just go straight and receive an unconditional loan approval.
That's a really good question because I think a lot of people, and it's a great question, a lot of people would want to have a pre-approval in hand before they make a decision, you know, which is normal, right? But I guess before getting the pre-approval, it's about, as you mentioned, getting the pay slips, having a look at how long the person's been in the job, if they're renting, all those kind of key requirements.
Yes, so when we assess your borrowing capacity to let you know how much you can borrow, we would then advise you at that point in time what that capacity looks like, and then that would guide you to, you know, a package or budget, and that we would create for you.
Yep.
So if you wanted to go ahead and do pre-approval, we can help with that, but our assessment would also let you know what you can borrow.
Great. So I've got they're just coming through thick and fast at the moment. This is great, and this is really really encourage anyone. We're trying to answer these questions as quickly as possible. Any questions, please just shoot through, and we'll try and answer. If we can't answer them, we'll be able to. If you provide your email and details, we'll be able to answer them. Another question, Anna, which is probably one we should have covered. So I guess with a broker, some people might think that it costs money, you know, to use a brokerage company. So the question is, does it cost money to book an appointment with Oakbury Finance?
So the answer is, it doesn't cost you anything to book an appointment to see us. It doesn't cost you anything for us to do the loan application. Right. So reach out to us and we can help you, and it's all free of charge. Now, the rates that we offer is, you know, better or lower than the rates on the market that the bank can offer sometimes. You know, there's nothing, you don't lose anything out of pocket by going to a mortgage broker. You would only gain more options.
Yeah, so it's free obligation service. If you're a first home buyer, like, you know, definitely speak to Anna. As I mentioned, hello@soholiving.com.au. We can even give you a call after this webinar, have a quick chat if you'd like. Otherwise, we can contact you tomorrow. So another question: how does the scheme? So how does the application for the scheme work?
So the process involves you applying for the home loan application approval first. Once your home loan application has been approved or pre-approved, then you would submit your scheme application, and then the scheme team within the bank would assess the scheme application accordingly and approve that.
Great, thanks, Anna. And if there's any follow-up questions to these, please reach out. What happens if my land isn't titled yet? This is a really good question. So maybe someone's bought a block of land already.
Yep. So when you come through to us and we do the initial assessment for you to work out what your budget and your borrowing capacity looks like, that would then determine, then you can go and purchase that land. And because the land's not titled, you can't actually do a home loan application. So you have two options at that time. You can use our assessment as a guide, and you can proceed to make your deposits and purchase the land, or you can go ahead and do a pre-approval. Now, pre-approvals are only valid for up to 90 days. So if your land is going to be titled after 90 days, then you would have to renew that pre-approval. Or as you've already been pre-approved, you already know that when you go back in 6 months' time or 12 months' time, as long as nothing has changed, you haven't changed your jobs, you haven't gotten married, if you haven't been married, if you haven't had kids or some more kids, or you haven't obtained any other credit facilities, such as a credit card, a car loan, etc. If no changes, then when you go back, your loan would be approved.
Okay, thanks, Anna. And I guess as well, for anyone that's maybe bought a block of land, this is an important one, and the land hasn't titled, they'd still be eligible for the new scheme, is that correct?
That's correct. So if you apply after tomorrow, it's from the 1st of October, so then you can apply for a spot on the scheme.
So a couple more questions. This one might be a bit of a hard one to answer. It might be because there's a lot of variables to finance, but what's the minimum income for a 550k home loan with a 5% deposit? Obviously, it probably depends on kids and financial situation, but yeah. That's
correct. So the best thing to do is, if you wanted to work out your borrowing capacity, just reach out to us and we can do it more thoroughly and correct. So we look at pay slips, we look at income, you know, make sure that everything is correct. But Kate, you are correct. So a lot of elements will affect your borrowing capacity, such as, are you single? Are you married? Do you have any children? Do you have any credit cards? Do you have any car loans?
Yeah.
You know, a lot of elements would affect your borrowing capacity. So we wouldn't be able to answer that as one general number.
And it's a funny one too. I remember we've had a customer before, Anna, where they've had a credit card of $6,000 and they've just had their credit card open. There was no debt to it. Some people have debt to a credit card, which is not a problem. You know, it's common for people to have a credit card. But I think when you closed that credit card, it increased their borrowing capacity. Was that right? Just over, even though they didn't have any money owing to it.
That's correct. So the bank looks at it as a credit card as an open facility. So if you have a $10,000 limit credit card right now, but you don't owe anything on it, what the bank sees is, well, tomorrow you can go out and spend the full 10,000 in one transaction. So when we go to expense the credit card on your application, we have to expense the full $10,000 limit.
And this question here, so to have, I think might have been misspelled, to have the first home buyers grant, the price needs to be minimum 600K, and could that be more than that? So I think they're asking, so for a first home buyer to receive the grant, what's the minimum package price? I guess there's no minimum package price, it might be maximum.
Yeah. So we've got a maximum, which we covered. So that's the maximum of under the new scheme of 950.
Yeah.
There's actually no minimum, so you could go as low as you like.
Yeah, perfect. Yeah, and that's what we recommend as well. It doesn't mean that the scheme's $950,000. You need to go spend all that for your first home. You can if you want, but you know, we're really getting people into the market. I think that's about what is the minimum. The last one we might have covered off, but it's good because some follow-up questions. Do you pay stamp duty with the 5% deposit scheme?
Yeah, so we have covered that. So if you purchase an established property, you can go up to a maximum of $600,000 only. If you go over 600,000, then stamp duty would start to apply at a very big discount. So for example, if you purchase the property at 650,000, the stamp duty would be roughly about 10,000 for first home buyers. But if you weren't a first home buyer, it might be $35,000. That's why when you go to build a new property, one of the best perks is that the land itself, not including the construction, can go all the way up to 600,000 on the land price. Now I'm sure that we haven't seen a lot of land that's all the way up to 600,000. So I can say for sure that the stamp duty would be waived on the land. Yeah,
we've also got with this new scheme, we've also through our marketing team put together a bit of a fact sheet on the scheme. So I think a lot of our viewers, might be interested. So if you do, it's just a bit of a summary of the new scheme. So if you are interested, please, please email us at hello@soholiving.com.au so we can send you through that fact sheet. But yeah, really recommend. It's obligation free. It won't cost you anything. Anna might even shout you a coffee. So if you want to have a discussion further, please reach out. We'd love to have a chat with you. Yeah, awesome. Perfect. Well, I think that essentially wraps it up for tonight. Really appreciate everyone's questions. We hope this was informative. As we mentioned, please reach out. From my take, I think this is a fantastic scheme for first home buyers. I wish I had it when I was buying my first home. That's the honest truth. There's been a lot of schemes come into play. I guess I'll just finish it off. Anna, you're the finance guru. You've seen a lot of schemes as well, come into play for first home buyers. What's your opinion on the new scheme and the benefits, if they are?
So I think it's a fantastic scheme because it allows you to have a low deposit of 5% and for you to be able to purchase your first home. So, for people normally that need to save a 10% or a 20% deposit, going back to a package of 600,000, 10% is 60,000 or potentially 120,000. So by the time that you try to save that deposit and then you go, I'm ready now, well, the prize package has now moved. So, you know, now it's 650,000 and, you know, trying to chase that package and get to that mark, but it is very hard to get there. So for now, you only need 5% deposit and you'll get 10,000 from the first home owners grant as well. So absolutely fantastic. And throw in, you know, free stamp duty as well. No, it's really, really good.
Yeah, and as well, when you kind of talk about that, I think of like, you know, when you say it can get people into the home quicker, some people, for whatever reason, might be forced to renting. So if they're renting, they're paying 25,000-30,000 a year. That's another expense as well. So yeah, it's a really, really great scheme. But thanks so much for everyone's attendance. As I mentioned, if anyone needs any more information, please email us at hello@soholiving.com.au. And yeah, we'll chat soon. Thanks very much.
Thank you.